Is this a sucker's rally? Are we going to go back down? The professionals say, yes, we are. Well, who has the answer? Only one place you can find the real answer is the bond market. The bond market's always truthful. They always tell you what interest rates are going to do. And remember, it's the bond market is our economic barometer because interest rates is a result, and interest rates control the market. Now, I'm going to show you, take a look at this chart. I'm going to show you how the bond market works and how the stock market works and how this all came together. And then you'll see why this thing does have a high probability of the market going down because of the bond market. The brown lines, that's the TLT. That's the 20 and 30-year bond right here. See another brown line. Okay, what does that mean? The rest of it, of course, is our stock market. Now, remember, the stock market between February 2025 and we peaked in February 2025. And when we peaked, remember, for 7 months, we went sideways. We couldn't break out because institutions weren't buying stock anymore. They gave up on the NASDAQ, gave up on Magnificent Seven stocks, so there was no breakout. 7 months. Now, if we go back and take a look at this is the bond market. The market rallied quite a bit because, remember, when this line's going up, that means interest rates are coming down. But you notice how they stopped, turned around, and interest rates went up. But the market continued to go higher. How could that be? Because we're in the middle of the election. People were all excited about Trump. He's going to get elected. And then something changed. We started to learn about the tariffs. So the market, as I said, all of a sudden we started to see yields going back up. The market started to pull back. Then they decided, let's start talking about dropping the rates. That's what they did here. Drop the rates. Let's drop the rates. Well, it didn't work. The market got worse. And then all of a sudden, see TLT here, the brown line? All of a sudden, rates went up. Went down, went up. Rates really went up high. Now, so it's the bond market that tells you which direction the stock market's going to go. Now, let's remove this for a minute and go back. Now you have a little understanding there. What happened on that Wednesday? Every time you have a big rally, a 16-year rally, but every time you have a rally, here's what happens. One day, when everybody's shorting the market, that's why you got to learn how to short. When you short the market, you take your profits. And on this day right here, last Wednesday, they took their profits. You have this big move. It happens with every crash. What happens is if your sell-off is 20% and they start covering the rally, usually the way it works, that one day will go up about half, let's say 10% of the crash. Look, any crash, you'll see it. Go back 2008. It happens almost every time. Now, what's going to happen? And you keep your eye on the bond market, but what we think is going to happen is yields. Again, yields, interest rates are going to go higher because, again, of all this inflation, all these yields were costing us more to import stuff. So as long as interest rates keep going up, you can't get up through the test, which is right up here. There's the test. So, in other words, always remember how the market works. The market always has its peak right here. That's the peak. Here we are right here now. Between here and here, you have all these people who bought stock and they refuse to sell their stock. They think it's going to go up. The problem is, how do you get through there? How do you get through all these people who are not selling their stock? It's hard. The test is at the top, not the bottom. And the institutions aren't buying, so it's going to be doubly hard. So because they're not buying, they're not participating, the highest probability is the market's going to turn around. And like it always does, this happens almost with every crash. It'll turn around because the test is at the top. When you fail that, it'll come back. and then it'll take out that low right there. When it does, you get your capitulation. That's where everybody surrenders. And that's when the institutions swoop in and buy stocks at bargain prices. So that's what I think is going to happen. But we've got to watch the bond market to find out. So for more information, click the link in my bio, and please subscribe and like and share. Thank you.